Good morning, early birds. Welcome to another episode of the Early Bird, the series where we look at the headlines and see how they will affect the market. Today is the 12th of February 2021, and we have three important items to get through. Before we start, just a quick friendly reminder to those who are new to the channel to please hit that subscribe button to stay up to date with what's going on in the stock market. I also do a series called Quick Take where I try to analyze trading investing opportunities in companies on the Australian and US stock exchanges. So check that out after this video. So yesterday I did a special report on the dramatic run up in share prices across the cannabis industry, particularly on Tilray and Aphria. I also mentioned that I went into these stocks expecting for the run up to last a couple more days. However, it seems the hype may have fizzled out much earlier than expected. I am not in particular concern because since I put in very little amount in Aphria and Cannabis Growth Corporation, and my Tilray holding is just running on profit as I have already taken out my principal. As we can see from these charts, it was a dramatic drop on Thursday. This is expected since the explosion in prices warrant a retracement, or in this case, more of a equally dramatic correction. However, with the push for full legalization, I expect that we will see more of these hypes and increased volatility. But once the industry consolidates further, investors can then weed out the losers and really focus on analyzing for potential winners. My plan here is to let the dust settle and double down. Doubling down at a lower price can help to bring down the average purchase price to something more achievable in the shorter time frame. Let's use my Aphria holding to illustrate the concept of doubling down. The first row shows my initial purchase of 20 shares at $27.01, which totaled to $540.20. Now, worst case scenario would have the share price plummet to its lowest support at 54 cents. All I have to really do is purchase the same amount in dollar value, which will get me another 1,000 shares. In total, I would have purchased 1,020 shares for $1,080.20. This will give me an effective average purchase price of $1.06, which, when another hype comes, is very easy threshold to surpass. Again, I bought the very minimum, so doubling down will not cost me too much more and will still be very manageable, and the prospect for the entire cannabis industry as a whole is quite positive. I would not do this for stocks like GameStop. Like I mentioned in the previous video, there is a fundamental difference between what's happened with GameStop and what is happening here with the cannabis industry. Now, if you have ridden the Bitcoin chain since 3 years ago, I'm sure this type of volatility would feel like home. All right, so this is a nice segue for more Bitcoin news. Now, Bank of New York, America's oldest bank, is stepping into the cryptocurrency game. They plan to issue, hold, and transfer clients' Bitcoin. This decision was made as Bitcoin becomes more and more acceptable in the mainstream financial circles. Most notable influence is Tesla's decision to purchase $1.5 billion worth of Bitcoin and their plan to accept Bitcoin as payment. Now, the office comptroller of the currency stated in a letter that national banks and federal saving associations have the authority to use stablecoins to conduct payment activities and other bank permissible functions. Although this is not specifically about Bitcoin, it shows that financial institutions and the US government are becoming more and more acceptance of cryptocurrency and the underlying blockchain technology. Who say you can't teach an old dog new tricks, right? And last but not least, this topic relates to the controversial legislative change in Australia called the News Media Bargaining Code. For those who are not familiar with the code, basically, the Australian government is mandating that digital platforms, specifically Google and Facebook, are to pay the original publishers for the news links that are shown on their platform. Now, Google previously threatened to pull its search engine from Australia if the code were to go ahead in its current state, but the Morrison government did not back away despite Google's threat. Microsoft, who owns Bing search engine, took Google's threat as a potential opportunity for it to dominate the Australian market and sided with the Australian government. Now, Microsoft is further urging USA to follow Australia's example It is hard to ignore that Microsoft public support for the code will do them very little harm, since Bing does not make up a huge part of Microsoft operation, but will potentially create a huge opportunity for the company if Google does pull out its search engine. And that is pretty much it for today's episode of The Early Bird. Thank you so much for those who tuned in. If you like what you see, please share, like, and subscribe to stay up to date. Please feel free to leave your thoughts on today's topic in the comment below. I'll leave you with a question before you go. What are your thoughts about Google and Facebook having to pay for news content on their platform? Please share your answer below in the comment section, and I will be doing an episode of The Early Bird every weekday morning. So please hit that subscribe button so you don't miss out. Thank you so much again, and remember, the early bird gets the worm. Have a great day, everyone.